A troubling report out this week regarding Americans struggling to pay back student loans. More than 40% of borrowers aren't making payments, raising fears they may never repay the more than $200 billion owed. Joining us with more details is Wall Street Journal reporter Josh Mitchell, who joins us from Washington. Hi, Josh. Great to see you.
Yes, hi. Thanks for having me on.
So, Josh, while 12.5 million people are current on their student loans, that's the good news, almost 10 million are either in default, delinquency, or have postponed repaying their loans. Now, that is an enormous number.
Right. It's very high, and especially when you compare it to credit card debt or mortgage debt, there are a lot of people that just are unwilling to pay back their debt or simply can't.
So, in your story, did you speak with anyone who is not paying back their loans? Did they give reasons for this?
Yeah, so what's interesting is I've talked with people who have said this, but research also backs this up, that people who have student loans, it's sort of at the bottom of the pecking order of their bills. So if they have a car payment, they'll make that first, because if they don't make that payment, then they could get their car repoed.
Yeah.
Whereas with the student debt, with student loans, there's no such threat. So they'll pay their mortgage payments first, or their car payments, or their credit cards.
So in your story, there's the awareness of a lot of criticism over these programs, that perhaps they aren't tying the payments closely enough to the student, or I guess now the professional, but the newly hatched professional's income, which tends to be rather low.
Yeah, so that's the trick here, is that there are these plans that these students can enroll in to tie them to their incomes. So there really isn't a reason to default on your student loans. If you enroll in these plans, you know, sometimes your payment can be $10 a month. Mm-hmm. The problem is that I think a lot of people have simply said, we're not going to pay back our debt. They've sort of tuned this out, and they don't respond to emails or texts or phone calls. And, you know, I think that one of the issues out there is a lot of people feel that they were scammed by their schools, and they say, why should I have to pay it back? I went to a really bad school. I'm not getting the job that I thought I'd get. I'm not going to repay these loans.
So this is a multi-layered problem. It's not just about the loans. It's about the education they feel they did or didn't get, the job they feel they should have gotten but didn't get. So this is a complicated picture.
Yeah, it is. It is. And, you know, one of the issues is that if these people damage their credit, it's going to affect their ability to buy a house or a car, and that has effects on the housing market and the economy.
True. They, like you say, damaging their credit. Is that something that the students you spoke with aren't considering?
Yeah, I mean, you have to keep in mind that a lot of these students, a lot of these people, they have low-paying jobs. Mm-hmm. And so even if they didn't have this student debt, they probably wouldn't be able to buy a home in the first place. So the problem is that maybe when they are able to buy a home with a higher income, they'll have that on their credit report. And so this could be an issue, you know, in the next 5 years or so.
Now, the Obama administration is aware of this problem, as you point out in your piece, and has made efforts to reach borrowers. Can you tell us a little bit more about those efforts?
Yeah, so they've tried really hard to basically contact them. They have these contractors that they hire to contact them. They send them phone calls, text messages, and the Obama administration has been trying very hard to tell people, look, get in these income-based repayment plans, because they don't want them to default on their loans. And not only is it an economic issue, it's a budget issue. Keep in mind that if people default on their loans, taxpayers will end up having to cover that cost. Right. So what they're trying to do is say, do anything you can to avoid defaulting on this loan. And so to their credit, they've gotten a lot of people into these plans that have actually brought down the default rate over the past year. The problem is that this is short term, so it's helping people avoiding default in the short term, but there's this long-term budget issue that the next administration is going to have to take a look at.
All right, Josh Mitchell, thank you. Something tells me we'll be talking about this story for a while to come. Thank you for that.
Sure.